Hello everyone and welcome to this video presentation on accounting for stock based on the SYSCOHADA accounting framework. This particular video presentation will stress on the class 3.5 which deals with services in process. So let us have a brief overview of the class 3 stock, which is the main account which we are considering in this particular video presentation. And our video presentation is going to stress on class 3.5 services in progress. So without further ado, let us define terms which we are going to use in this video presentation. So let us start by defining or classifying inventory or stock. It's furthermore important to know that inventory or stock are assets, and as such they are recorded in the asset section of the balance sheet. So these are assets which are either held for sale in the ordinary course of business, either goods or finished products. Goods are recorded in account 3.1. Goods held for sale are recorded in account 3.1, and finished products are recorded in account 3.6. The entity can have stock of goods which are held for sale either by purchasing them and selling them at their current state, just like in the merchandising business, or by converting raw material into final finished products and selling the finished products, just as in the manufacturing industry. But the bottom line here is you have goods which are held for sale. Inventory can also be assets which are in the process of production, mean work in progress, or services in progress, or goods in progress, or intermediary products. These are not the finished article, they are not the finished product yet, but they have already crossed the stage of raw materials. Stock can also be materials or supplies to be consumed in the production process or in the rendering of services, usually consumables or raw materials. Raw materials are consumed because they are converted into final products, whereas consumables are used in order to perform a given service. Let us continue with our definitions. The next item of definition will be to look at two different stock systems that we have in the SYSCOHADA framework. The first one is the periodic stock system, which is one which records stock on a periodic basis, usually once at the end of the year, and it's during that time that stock is recorded or is capitalized as an asset. The second method is to use a periodic inventory system where you have a perpetual inventory system, where you have a continuous method of recording stock entry or exit of stock. In a perpetual inventory system, stock is carried out continuously, not on a periodic basis, but on a continuous basis. It means that entries and exits of stock are recorded directly in the stock account, which is different from the periodic stock taking, because entries and purchases of stock and materials are recorded as expenses, and it's only at the end, during the physical stock taking, that the amount of stock is known and recorded under the stock account. But with a perpetual inventory system, Stock entry and exit are recorded directly into the stock account and are not considered as expenses. We are going to see the treatment of this periodic and perpetual inventory system in much more detail when we will be looking at the double entry. So we see that these services in progress which we have been talking about are studies, research and ongoing services which have not yet been transferred to the buyer. It means the entity is undertaking the study and the research, but the conclusion, the report on these different studies have not yet been submitted to the buyer. Because it's when the report or the conclusion of these services has been achieved or has been made, that is when the service is complete, is deemed to be complete. So this account is used to record the expenses incurred for this study's research, but which have not yet been completed and hence have not yet been transferred to the buyer. So let us look at the double entry system involved in account 3.5. Remember that we have defined the two different inventory systems which are allowed by the SYSCOHADA framework. We have the periodic inventory system and the perpetual inventory system. So if an entity decides to use a periodic inventory system, at the end of the year, the entity is going to debit account 3.5 services in progress and credit account 7.3.5 stock variation of services in progress by the amount of the services in progress calculated at the end of the year. So the services in progress at the end of the year is valued, and that value is debited into account 3.5 and credited into account 7.3.5. Also, simultaneously, the entity is going to debit account 7.3.5 stock variation of services and credit account 3.5 services in progress by the opening amount, the initial amount of the services in progress. This is the amount of the services in progress or the closing amount from the previous year, or if you want, the opening amount in the current year. So this entry, this credit entry in account 3.5 is to remove the initial amount of stock of services in progress, such that what can remain in account 3.5 will be the closing amount of services in progress determined or calculated at the end of the year. So this is a double entry which we use in a periodic inventory system. In the perpetual inventory system, the first thing for us to do is to debit account 3.5 services in process each time the cost of providing the service are capitalized. This is done by crediting account 7.3.5 stock variation of services in process. At the same time, the account 3.5 service in progress is credited each time the services are completed and sold or transferred to the buyer, and in this case it is credited by debiting account 7.3.5 stock variation of services. So this is the relevant double entry for the perpetual inventory system in account 3.5. Okay, we have come to the end of this video presentation. We hope you have enjoyed the presentation. We hope it helped you in your studies, in your work, and as usual, don't hesitate to contact us and check out this page for more video presentations on the SYSCOHADA accounting framework. But for now, bye bye.